Welcome to the daily stock review of AMD. Goal of this channel is to uncover the world's best stocks that have 100x potential by reviewing 1,000 stocks in 12 months. If that sounds good to you, subscribe to come along. Who am I? I'm Jack. I'm an individual investor on the journey. I'm just 2,500 hours in over the last 7 years, sharing the lessons along the way. This is my investing process. I'll go over today how I came across AMD and the 5-minute check to see if it's worth looking into further. These are the investors I learned from. They did pretty well for themselves over just a little while. So by following in their the breadcrumbs they've left behind, should be able to follow in their footsteps. If you like the free resources that I wish I had when I first started, investing checklists, stock valuation calculators and things like that, they're link in the description. They're free. It's my gift to you guys. Let's crack in. AMD, Advanced Micro Devices. So you can see that it's been fairly steady. Still a pretty speculative kind of stock with the way the price has been bouncing around even over the last 5 years. And then just in the last 12 months, even the last 6 months, boom! We've seen some huge growth just in terms of the expectations that shareholders have had for this business. So it's gone from $200 a share, boom, within space of 2 months. It's gone all the way up to 500. So more than a double there. And it's kind of flattened off and starting to trend on the way down. We've got a price to earnings ratio of 125. So that's pretty high. It's usually anywhere from the range of 15 to 25 is what most people would say would be pretty ordinary and kind of a normal number. Now, when you've got really high growth, the price to earnings ratio will be very high. So what this means to me is investors got some really good news or very speculative news, and they've jumped on in the hope that this business is going to have record profits in the future. They're expecting really high growth. Now let's have a look and see if that's actually came through on the financials thus far, or if it's just purely speculation. If it's only based on information from news reports, the CEO talking about it and different things like that, or even long-term contracts and things, unless those contracts have bolted in amount for income and things like that, it can be a lot of speculation at the end of the day, and it's not based on facts. So let's have a sticky beak through and have a look at the financials to see if this business can expand to meet those expectations. So what I want to do for my 5-minute check, and that's pretty much how I came across the stock. It was, what are some hot stocks at the moment, and AMD came up on it. So what am I looking at? I want to find the latest annual report. So I've cracked that open already. And I want to just look for the financial statements. So let's see if we can make that a little bit bigger for you boys and girls following along at home. So I've got our statement of operations, which is our income statement. We've got net revenue. It's in millions, so that's 22 billion, 25 billion, and then 34 billion. So business has already got some pretty high growth back here, which was 22 to 25 to 34. So it's pretty much going to have a double in about 3.5 years, just by that kind of trend. Now, let's have a look at net income. So net income's gone from just under $1 billion to 1.5 to 4. So that's pretty good. It's been able to translate more of the money and revenue they're getting in the top and hitting the bottom line of the business. So that's good. What kind of margins are we looking at? Cost of sales is pretty much about half. So we're looking at kind of like a 50% gross margin there. Net income is, net margin would be 4 against 34. If we triple that, we get a little bit over 100. So we triple that, we get about 12. And then a little bit less. So we're talking about around a 10% net margin at the end of the day. Now, is that a high margin business? No. Cost of sales at the end of the day is pretty meh, and the net income is probably around the same. It's not showing that it's got a strong moat around the business. In terms of its pricing, and if we have a look back at what that news was back earlier in the year, there's a lot of talk about AMD being an alternative supplier for AI. So whether that be providing the hardware and chips, etc., to the AI infrastructure, data center kind of build outs. So if they're an alternative supplier, that means that there's one or two people in it. Now, the best case would be that the businesses get in a duopoly where there's two main providers for that, which would be NVIDIA and AMD. Worst case is both businesses and the AI bubble crumbles. The next best is, or next worst is NVIDIA is the front runner and does provide the best products and services, and AMD shrinks into nothingness, can't penetrate that market as well as it can. A little bit better view than that is AMD come in. They're still not the favoured supplier, but they are able to reduce the amount of margin that NVIDIA can get from selling their products, which just keeps NVIDIA honest, which will mean NVIDIA then decreases in value because their margins will decrease because there's more competition in the space. And what's the best outcome here? Like I said, AMD and NVIDIA become the duopoly. They both pretty much have so much demand or continued demand for their products that the margins on them continue to expand and become higher, and AMD starts becoming an absolute cash machine just like NVIDIA. Where do I think it would be? I don't think it's on either end of the spectrum. Pardon me. I don't think it's on either end of the spectrum of the likely ones. So I don't think that AMD is going to become the main runner in the space with NVIDIA. If anything, I think they may share part of the spotlight, be an alternative supplier, get a little slice of the action, and be used as a bargaining chip to decrease the costs of NVIDIA's products in the future. And that is all dependent on supply and demand. So I don't have a good enough crystal ball on how much demand there'll be for increasing data centers, etc., and continued build-outs. Really depends on what reaches first, the point where people need them to be profitable, and things like that. So just for this business, let's keep going. So net income, pretty good increase there. Balance sheet, we're just looking to see how healthy it is. So we've got total assets, 76 billion versus current liabilities. Oh, come on, man. Well, it's only a small amount. It's a lot less than 76. And long-term debt position, 7.2 versus 9.4. So not a lot. of debt there. So pretty healthy here. Cash and cash equivalents is almost like able to, or their total current assets is able to wipe out all their liabilities. So they've got a pretty healthy balance sheet. Now, the customer appears to have mastered, the business has appeared to master its customer with those increasing in revenues. The margins in the business are okay. Doesn't really have a moat really around it. It's because it doesn't appear to have a lot of pricing power. And by definition with NVIDIA and AMD, with those expectations, that's kind of where that sits. So let's go and have a look at the cash. We want to see if management's being rational with how it's spending the cash in the business. So net cash provided by operations, 1.6 billion, 3 billion, 7.7. Whoa. So nice and tidy increases there. It does fluctuate through the years, which we'd expect. Net cash is usually pretty lumpy. But let's just see where that cash is getting spent. Purchases of plant equipment, pretty low. Purchases of short-term investments, that's usually just things that they can turn to cash pretty quickly. Proceeds from sale of short-term, net cash, loans. They're not really investing in anything there. It's going to increase the value of the business. They've obviously ploughed a fair bit of that money into those short-term investments, so they're held onto that cash. It will be able to be just converted back to cash when they need it. So they may be getting positioned for a purchase or a build-out. You got to remember, this is from Feb 4th, 2026. So if they're holding that cash position, they're getting ready to do something, and that may be part of that news as well. What else have they been up to? Proceeds from debt and commercial paper issuance. So they got some money from debt, and they paid part of that off. They got a little bit of money they're putting into repurchase of common stock. So that's kind of okay. That's a good sign. Now, it really depends on what the price of the stock is. Would they continue it into the year they're currently in? I wouldn't be doing that because it'll just destroy shareholder value at the end of the day. Because it appears to be well overpriced. Have a look at this. Do I think that crazy growth rate would be expected? No. But it really depends on that outlook and you guys doing an analysis on that and having those unique insights. So do I think I should be looking into this business further? Does it meet my criteria? Do I think it's going to 100x? No, it's already a pretty large business. It'd be very difficult for it to 100x in that time, and not just from the price overshooting expectations and then coming back down. I'd actually want the value of the business over that time. Is it worth looking into? Definitely. There may be an opportunity in the future where they have a few shake off a bit of those very high, perfectly priced expectations by the marketplace, and then come back down to reality. Maybe an opportunity then to buy in at a reasonable price and watch it kind of increase over time as the business grows into what that could be. But at this stage, there are a lot of risks and a lot of outcomes that the business kind of needs to hit, a lot of goals for it to hit before it's going to translate that money to the bottom line of the business and represent what probably close to doubling every year from this kind of PE ratio. If it's got a market cap at $800 billion, for it to grow into that, yeah, maybe. It might grow into that within 10 years, maybe 5 if they're lucky. But by the time they get there, you got to see how much it was left over. And time is obviously a big part of that as well. Knowing how long you've got to hold on to that before you're going to see that expected growth. Effectively, you're holding onto the bag, hoping that the management team, AI, gets proven right in terms of the amount of growth expected there, and all those bits and pieces about supply and demand dynamics as well. So if that's your shit, you should be looking into it, and you'll know more than me. But otherwise, it just doesn't fit my criteria, so I'll keep looking. Thanks, guys. And otherwise, check out this next video because YouTube thinks you'll like it. Cheers.